YouTube? We are back with another lesson, and today I want to go over these trades I'm in because this morning when I woke up, I was getting smacked. All my trades went against me for some reason, bro. When I'm going against the Canadian dollar now, all of a sudden it want to have all this good news. So we finna go over that today. Y'all gonna see exactly what I'm talking about. I'm gonna show y'all exactly how I'm holding and hoping, as people love to call us dollar cost averaging traders, we're holding and hopers. So I'm finna show y'all exactly how I'm finna hold and hope this trade come back to me. Let's go. All right, so this is Aussie CAD. The trade was performing really well at first. Nice higher high, higher low, higher high, higher low. It failed to make a higher high though. I was hoping for a higher high so I can then close profits, but instead it made this lower high and now it looks like we're making a new low. So to me, it looks like structure has changed. We didn't make a new high, we broke this trend line, and now we're making a new low. And the thing is, the reason why it broke through this trend line, the reason why it made a new low is because when I go over here to forexfactory.com and look at the news, I always tell you guys, you gotta look at the news. There is no way around it. You gotta look at the news, man. You need to see why these currencies are moving. So when I woke up, I seen what a Canadian dollar have. They had some good median CPI year over year, some good trim CPI year over year, and some good common CPI, all better than expected. And although inflation is not good for consumers because prices get more expensive, it's good for the currency. Higher inflation or better than expected inflation is good for the currency. Always remember that. When you have hot inflation coming in, the currency might spike up. It will shoot up. Because when you have high inflation, that means an economy is more likely to hold rates steady or to potentially even raise their interest rates. You don't need to be an economist. You don't need to be a know-it-all. All you need to know is that inflation will make a currency strong because it gives them the opportunity to hold rates steady or raise the interest rates. That's all you need to know. And so because of that surprise, unexpected news, we had some Canadian dollar strength. And because of this, my trading plan is now adjusting. So now, since I'm in drawdown, what I'm looking for is, one, I really want to wait for fundamentals to change so I can get some Canadian dollar weakness again. But I may add down here and look for a bounce so I can get out at like break even or a small profit. Worst case, this is what I'm looking at. And a lot of people will ask, why even go through that drawdown? Why not just close the trade? Okay, you do that. You do that and see where it gets you. Because I was trading with a stop loss for years. I used to close out of trades at small losses, medium losses for years. It has never got me anywhere. Anytime I'm closing out losses, you know what happens? It comes down a little further, everyone gets scared, and then at the end of the day, the Forex market is so volatile, next thing you know, you see a spike up. You never had to lose money in the first place. You never had to lose money. And on top of that, if you don't over leverage, the drawdown isn't scary anyways. See, I'm a stock investor, and when I stock invest, I hold my trades, my positions for a long time. Months, years. I know how to hold positions. I have patience. So when it comes to currencies, holding these for a week or two, a couple of days, a month if I have to, is nothing. What I'm trying to tell you is you don't have to lose money for no reason. Why lose money? Why not just control your risk and watch economies, watch fundamentals, watch price action, and just get out of it in a break even or a profit? Because you can do that every time. And real traders aren't just sitting here losing money all the time, going through losing streak, like just losing. That's why I don't use a stop loss. I just lose. I make money, I lose money. I make money, I lose money. So in order to avoid those losing streaks, in order to avoid those deep negative equity drawdowns, closing all these losses, I'd rather just not. I've been in this game long enough to know how this market moves, and more often than not, you're going to get a bounce back in your direction, and you can close for a small profit or a break even at a worst case scenario. But what you guys need to understand is that being a dollar cost average trader comes with its cons, just like trading with a stop loss comes with its cons. The con is this trade, this trade, this trade, this trade, this trade. I'm in drawdown on all my trades. The con is sometimes I'm holding drawdowns for a longer period than most people will like. But that's the con. Every strategy has its cons. You gotta take the bitter with the sweet. You can't just wanna make the money, but not pay the price to get that money. The price you gotta pay is patience. The price you gotta pay is mental resilience. You gotta have these traits, these attributes in your character if you're gonna survive in this game, because drawdowns are inevitable. Losing streaks if you have a stop loss are inevitable. You're not going to keep winning. People with stop losses lose. The people you see who don't lose like that, the professionals who don't lose like that, are the ones who dollar cost average trade. Professionals have been doing this forever. Banks, hedge funds have been doing this forever. Not using a stop loss is a known thing in the professional community. But in the YouTube guru space, hey, good luck. You're gonna get torched. No stop loss, you're gonna get torched. Because these are unprofitable traders talking to you from a one-sided perspective. Any profitable trader knows in reality you can make money anyway in this market. Stop loss, no stop loss, it don't matter what you do. People are making people are making money in so many ways in this market. There is not a one size fits all. So yes, I hold through the drawdowns, and yes, I actually enjoy it. Because as a trader, you gotta have mental resilience. You need to be able to work yourself out of trades. How are you gonna survive in this game if you can't go through drawdown? You're gonna get torqued. Man, y'all just need to understand, drawdowns are normal. Drawdowns are normal. I'm in an NJ trade. We in drawdown. This was supposed to be a hedge for my Swiss yen trade. Swiss yen, I'm actually not that negative on Swiss yen. I'm only down like $500 right now. We could go in my portfolio trades right here. You guys can see I'm negative 1,400. I screenshot this at 6:30 when I started this video. And you can see I got multiple positions open. I got a 0.2, a 0.5, a 0.15, 0.1. I got very small positions because I'm scaling in. That's why my lot sizes are so small. Like you see these really small lot sizes because this drawdown doesn't hurt me. And the way I win money is by not losing it. That's it. I enter my trades with caution, with a risk-averse mindset, and I let the money come to me. I'm in a New Zealand USD drawdown. Once again, I still like New Zealand fundamentals. New Zealand has been coming in strong lately, so I like New Zealand. US has still been kind of weak, but the New Zealand dollar and the Australian dollar correlate heavily. They correlate heavily. Those are both risk-on currencies, and they do better when the US dollar is weakening, when the Swiss franc is weakening, because they're seen as riskier assets to hold. Whereas like the US dollar, the Swiss franc, the Japanese yen, those are more safe haven assets. So you'll see those currencies do better in risk-off environments. And we got Euro Aussie. I actually should have closed Euro Aussie when I was in small profit because I already talked about how the euro was really strong on the Edge Finder. I seen the institutions have been buying it up. Go back to my COT data. This is the Commitment of Traders data report. This software puts it all into one platform. Because to read the Commitment of Traders data report is very confusing and clunky and extra. So they made this software so I could just look at it right here. In the Commitment of Traders data report is where institutions, hedge funds, they have to report what they're buying and what they're selling. It is a few days lagging though. It's It's lagging by 3 days though. That's the only con. But hey, can't have it all, man. So here we can see we have 15,000 long contracts in the euro, and I seen that, so that's why I'm like, I don't know. I should have closed it, so that's really my fault, to be honest with you. But yeah, it's all good though. No biggie. This is what we live for. We live for drawdowns. Drawdowns is what makes us good traders. It's what makes us mentally resilient traders. I want you to understand that. But yeah, so we're gonna see how these trades play out. I'm really just playing these all by ear, waiting for news to come out, looking at technical analysis, and I will add to my trades appropriately. But the thing is, this is all worst case scenarios, or bad scenarios, I should say. This might not even happen. This realistically could be a spike down, spike back up, retest, back to the upside. Because the market moves like that. Which is why, this is why I hate stop losses. Because the market is so volatile, the market moves so erratic that I would not have a stop loss in this market. And before I end this video, I want you guys to understand something. Most currencies, right, are mean reverting. So what does mean reverting mean? Well, this. Down, up, down, up, down, up, down, up. Look how the currencies move. Look how these currencies move. Look at it. Why would you have a stop loss? Look how erratic it is. If you have a stop loss, you're going to get destroyed. Look at this. Up, down, 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 up. Look at this. The proof is in the pudding. Let's go to another pair. Look at Euro Aussie. Look at Euro Aussie. Let's start right here. Up, down, 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 up. All I gotta do is wait for it to come down and close at a break even or a small profit. See, but this is where experience comes in. This is where discretion comes in. You need to be able to eye these and get a feel for when you should get in, when you should get out, because you don't want to overstay your welcome. The Forex market is very, very volatile, so you do not want to overstay your welcome no matter what pair it is. Getting in at a good time, get out at a good time. These pairs, they just move and move and move. It's very, very rare that a trade does this. Just moves against you like this. It's very rare. It don't happen. Even if it does, that's even better. Because I know when it pushes up that high, that strong, that the come down is going to be that much stronger and better. And I'm going to add to it and I'm going to make so much money on the way down. Look at this. What happened when it shot up like this? What happened? What do you see? Down, up, down, up. It came all the way back down. Now, the question I have for you though is, do you have the patience? Do you have the mental resilience, the mental fortitude to go through all this? Do you have the risk management, the discipline? Because most people don't, and that's where they go wrong with this strategy, and that's why most people can't do it, but that's also why most people are not profitable. Aussie CAD, same thing. What happened? That push down that you're so afraid of, look at that. What happened? Shot way back up. You know how good of a profit that is? I actually wish that I got caught in this and I was accumulating this on the way down, because I would have made all this money back on the way up, all of it back. And that would have been so amazing and so satisfying. But it's all good though. But yeah, that's my lesson for today. Make sure you hit that like button down below for me. Tune in. I be dropping like every day, to be honest with you. Every day, every other day, depending how I'm feeling. And yeah, stay tuned. More content coming, more trading videos coming, more trading ideas coming. And I'm gonna catch you on the next one, man. Have a good week. Don't lose your money. Stick to your trading plan, have risk management, and stay disciplined. Let's go.